Good morning, everybody. It's Thursday, 6th of July, 2023. My name's Anil. We're going to do some market analysis. Do remember this webinar is for education purposes only and not intended as investment advice. We have the usual risk disclaimer. Please take a moment to read it. Trading is risky. You need to know what you're doing. And a little bit about myself. Those of you who are regular viewers to my webinars, been trading 20 plus years, futures, commodities, Forex. I develop algos and trade algo systems as well. So have a good understanding of how markets move from a discretionary point of view and also from a mathematical point of view as well. So what are we going to cover this morning? We're going to look at some charts we've been looking at for the last few days, few weeks. We're also going to look at upcoming news. We've got some important news coming out tomorrow and today, so we need to be vigilant about that. We'll do some analysis on that too. And let me just check. So we're also going to show you how to access some of the tools that I'm going to show in a minute. They're free at Plus Zenfinex, so they're anything that can help you and guide you will be beneficial to you. And as always, if you have any questions, please don't hesitate to ask. I'm here to help, even if it's to look at a particular chart or a currency that you're looking at. If it's on my charts, I'll definitely do some top-down analysis for you, the way that I do every single day. And here's the URL for the free Zenfinex tools. Just take a note of it, take a snapshot of it, register, it's free. And you'll get to see some of the tools I'm going to be using this morning, including trading views and featured ideas and the economic calendar plus. And, it's has other tools in there, which I tend not to cover on a regular basis, but I do separate webinars for those tools. But why don't we just get straight to charts? I think that's what most people come to these webinars for. And actually, before I do that, let's look at some news, because we've got some news coming out today and tomorrow, which I want to make sure that you are aware of and that we do a little bit of analysis around what might be happening. So it's July the 6th, and probably the most important one is going to be tomorrow, which is the non-farm payroll. Those of you who never traded it before, it's a particularly volatile news announcement that comes out, monthly, and we'll look at how markets move on previous, but also today. We got initial jobless claims, which I think will throw the market around a little bit. And if you're in a trade, how to manage that trade, and if you are looking to get into that trade, I'll give you some. If you have any questions about how to do that, I'm more than happy to do that. I have a few people joining us, which is great. And again, as I say, please don't hesitate to ask me questions. So what am I particularly looking at today and tomorrow? I'm going to be looking at what's been happening to gold and a couple of the indexes which I've been watching, and Aussie dollar, because they've been flying around a little bit. And we'll try to do a bit of a deep dive into why that is and what that analysis means in terms of trading opportunities. So I'm going to sort of look forward one day, if you'll forgive me. I'm going to look at non-farm payroll, and it's really to illustrate how we can use this tool to see what happened, on previous non-farm payroll days, and how either to trade it or not to trade it. And from my perspective, I tend to stay on the sidelines for non-farm payroll because it is so unpredictable. Obviously, if I'm already in a trade, I will manage my way around that. But certainly it's something that you need to be, very aware of. To not be aware of it, could surprise you and, knock you out of positions or whatever. So let's have a look at how price moves from previous. And those of you who've never used the Zenfinex Plus tools, this particular tool I use every single day, which is the calendar. It's not just a calendar of upcoming news events. It also does some further analysis in terms of, what happened to price on previous non-farm payroll days. And, you know, we can look at last month, for example, this one here. So June the 2nd, the non-farm payroll was 339 actual versus 180 forecast. And in the subsequent days, weeks, it's, you know, had an impact. And again, if we look at the one previous to that, and we can scroll back. So this is why I find this tool particularly useful, because if we look at May's number, it's highlighted, and May was 253 actual against 190 forecast. So it gives you a look back in time to see how non-farm payrolls was affected, not only, you know, in historical terms, but let's see what it does in the sort of few hours and minutes after news announcements. So for that, we look at the impact tool that's here, and what we're able to do, and remember, non-farm payroll hasn't come out yet, so we can look at last month, June the 2nd, and what this box is showing you is that there was a range of about 61 pips on the euro dollar after the non-farm payroll. Why the euro dollar? Well, it's a very highly traded currency, and obviously the dollar would have some impact on that particular currency. So we can see here, it was announced, you know, at this moment in time. It had a bit of volatility in the, now let's go shorter first. Let's look at, you know, literally 15 minutes after the news. 15 minutes after the news, it ranged 30 pips. And, you know, there are some people who like to trade news, but you just have to be a bit careful, because spreads meaning the difference between the buying price and the selling price, can get a bit unpredictable. And whilst you think you may be getting a price at a certain level, you may end up being filled at a different price. So this is, you know, the ups and downs of news trading. You know, there are advantages, there's plenty of movement in a very short period of time. Downside is that the spreads can widen and can affect your entry and exit prices. So this is showing you that 15 minutes after June's non-farm payroll, where actual was higher than forecast and higher than previous, and, you know, 1 hour afterwards, price went down through that volatility and then came back down again. So let's see what happened 4 hours after the event. So you can see this initial volatility without any kind of clear direction, in many ways, is just really clearing any liquidity that may be above and below certain prices. So you always have to be careful with big news announcements like this. And I tend to wait until I see the impact of that news and how it affected that particular currency a bit longer term. And then you can take a bit of a view in terms of, will the trend be now established as a result of the non-farm payroll? So that's what's going to happen tomorrow. So you need to be very mindful of that. But let's see what's happening today. And by the way, these times that you see on here are, you know, GMT London time. So, you know, make sure that if you're in a different locale, adjust it accordingly, right? So it's 1:30 London time, non-farm payroll, and adjust your time according to wherever you may be. I know we have people come to these webinars from all over the world. So today, what have we got today? So we've had some Aussie balance of trade May news, right? And that's why I want to have a look at the Aussie dollar in the charts in a minute. So if we look at, and I'm not sure if it will show it straight away. So this is still June's number. So they actually haven't updated the chart for new, but what we can do is look at our own charts, can't we? So this was 2:30 London time, Aussie balance of trade relating to May. And, you know, they gave a forecast of, you know, Aussie 11 billion, but it was actually a bit higher than that. So if we now go to our charts and see how that news impacted the Aussie dollar, it can start giving us, really backing up what I was saying, that you have to be careful around red news. Let's have a look at some charts. And I'll go straight to the Aussie dollar. We'll have a look at some others in a minute, but let's have a look at what happened on an hourly basis from that news. So 2:30, that was a few hours ago, and this is the volatility that it created. As I said, volatility is a double-edged sword. It's good in the sense of, you can get to your targets quicker, but also the fast movements can increase spreads and such like things. So let me just kind of describe what I see here. So what we can see here from a sort of 4-hourly perspective, we've had a large fall from resistance. And maybe what I'll do is do what I do every single time. I preach it, so I should practice it. So I'm going to get rid of everything, and don't be alarmed. Almost everything will come back exactly the same. So let's just get rid of everything. And this is what I'm trying to highlight on every single webinar, is that start with a naked chart, no lines, no oscillators, no moving averages, and look to frame the market. See where key levels had been established. What I mean by established is that we can see here, let me put the cursor on it so you can see, markets went up, turned, and came back down. And a similar thing down here, right, from a daily perspective. So we can see here, we've got a frame of reference, basically, and we're almost smack bang in the middle of that reference in terms of we're about 50% of between the high and lows. And, prior to that, we had some consolidation and try to break out. Depending on whether you're a longer term, mid-term trader, from a pure short-term intraday, sort of few-day trading perspective, we'll go down to a 4-hourly basis. In fact, before I do that, let me make sure I include this daily low as well. So we can see here, this is a level of support. Markets came down, or the Aussie dollar came down, bounced off this level here. We've got a bit of consolidation here, but that will be picked up on the 4-hourly. So if we go to the 4-hourly charts, and what we can see here is our boundaries being, established from the daily perspective. So we can just adjust them slightly just to make sure that we have a frame of reference, right? So now that we're at the 4-hourly basis, we can start putting some new levels in to see where additional support and resistance may be from a shorter term perspective, if you indeed call 4-hourly a shorter term perspective, right? So what we can see here, that we established a level of support. What do I mean by that, right? So prices moved up, came back down, bounced up, came back down, and I will adjust that. We'll go down to the hourly, which will again refine these lines further. And we also see that if we now pull out a little bit, we can see that obviously, right, I mean, and this is why it's important really to have clarity in terms of price action. What you're actually looking at in terms of price action becomes a lot clearer, without too much noise of oscillators and indicators. So we can see, right, look, clear up channel, and we can see here down channel, right? So nothing amazing there, other than if you know how to trade these channels, as we do, if we combine them with support and resistance, we can start looking for new trades around our ideas. So let's just see if we can move that a little bit more. And I'm just going to go to the hourly chart, and we're going to start looking at what's happening recently and right now type of approach. So what are we seeing, right? So we've got our boundaries that have been established by our daily and 4-hourly. We can see these spikes have created these levels. We see that this downward channel has been indeed broken. And what we can see here from an hourly perspective, that a new channel, a shorter term channel, has started to be created. So again, what I'm trying to do is frame price. I'm trying to see where turning points had occurred in the past and how those turning points can be utilized in our trading moving forward. So we can draw a channel right? From, you know, the smaller the time frame, the more messy the channels get. But essentially, I think there'd be no real disagreement with me regarding, so we've had this longer term down channel, it's broken out of that downward channel, now it's working its way up back to resistance, and it couldn't quite get there, right? So what it did, and I'll draw a little object in there so you can see, and you know, we can start piecing together ideas, right? So what we're doing is, rather than just looking at the chart and saying, you know, what is all this noise, we're starting to build in some logic around any ideas that we may have in terms of trading. And so what is trading? Trading is an idea, isn't it? It's an idea that you think the market will either go up or down. And you have to develop that idea, right? You have to build upon building blocks, right? So we've done that by creating some support and resistance levels. We've created a downward channel, we've created an upward channel, right? And it's broken out of that, came back down to one of our previous resistance levels, our important levels from the past. And, you know, if I zoom out, you know, this is looking like it was before I took all the lines out, maybe a little bit more detail, because more clarity gives us more detail, right? So we can see here, there's an upper boundary here. We've got some support here. And now what is interesting is that after this recent news, we just looked at a few minutes ago, right? It's had a positive impact, found this level here. And if I now go down to this level here, we can see that prices have respected this level, and I'll need to magnify this a bit more. Now, let me just make this a different color, because all the same color does make it a bit more difficult. Let's just turn that into another color, just for clarity purposes. Right, so from an hourly perspective, so we've come all the way down from daily, 4 hourly, and now we're looking closely at price, looking closely at, are any of these levels, is there any clarity in what price is doing right now? So we're starting to build up our story, right? Past story, current story, and what we think will happen as a result of, you know, a break of this channel, this level of resistance, major resistance here, a big move up. So what do we do, right? So we can start looking at price and seeing what it's doing right now. And what we can see here, that after this big move, it only just spiked. So this is a very bullish type of price action, right? This is saying that the market, or the Aussie dollar, pushed down and probably took a lot of stops that have been here. So on my previous webinars, I talk about these turning points a lot, right? And what are these turning points? If you flip it round the other way, these turning points are used by traders as stops and targets and turning points, right? So they're doing it as well. So what you can do is you can start building a bit of a picture and saying, okay, let's start from this upward channel, try to read the story of the past, and then see what that does to us in terms of current price, right? So look, it found a level. So let's talk through the story. The story was that price level of sort of 65.96, call it 66, right, was a level of support. And I'm only on the hourly, so I'll just go back up to 4 hourly. So I prefer to do analysis on slightly longer time frames. But we can see, for a space of a period of time, this area here was consolidating after this move down. So it kept coming down, higher, lower highs, because it couldn't get higher than this point, created a new low, lower than the previous low. This went as high, but not as high as there. So it's a higher, sorry, a lower high. And then it found a base at this level of support. And it hovered around that support for a period of time, bounced off it, and eventually hit the top of this, this area here. And if we look at it from a slightly longer term perspective, what are we seeing? And again, what we're trying to do is build our story. We've seen the downtrend clearly unfold. We found a base, certainly for now, unfold. We've seen a bit of hesitancy in terms of, is the price going to go up or down? Kept hitting its head against the sort of 68.81. I'll call that 67 for round number purposes, only 20 pips away. And what it's done is saying, look, here's our sort of consolidation. We broke out the consolidation. We can't seem to get above this level. There's major resistance above here. However, the news that was announced, a few hours ago, has given more strength. So we have to ask ourselves: are we going to continue this move up and expanding our channel? Right. We can start now, sort of looking at how. In fact, let me just get rid of this channel, and I'll draw a new one based upon what we might think might happen as a result of this. So I'm going to go back to the 1 hourly. And again, if there's any questions, don't hesitate to ask. I'm here to help you. Right, so now we're getting in on the hourly. So now let's read what has been happening for the last few hours, right? So we've, again, discussed it. It's hit its head against some level of resistance, and it started creating a downtrend, right? A down channel from a shorter term perspective, right? Remember, when you're trading higher time frames, let's put it a different way, you're going to have a different channel on a daily basis, which means bigger stops, bigger targets. 4 hourly, they're going to have slightly less stops and less targets. And as you get lower into time frames, your targets are less available to you, generally speaking. And I don't mean all the time, because if you can get in the right direction of the trend, getting in from a shorter time frame can give you a lot of advantages in terms of risk to reward. But let's not divert from our idea of what is going to happen next, right? So we can see here that from an hourly perspective, right, a downward channel. So it's been grinding its way down, coming up, coming down. And only now, right, as a result of this news, we're starting to encroach on this downward channel from an hourly perspective. What I mean by that is that this spike up, right, would have been an area where there could have been stops for somebody who wanted, or the market, to trade continually down back to this level. I've got a question here. Let me see if I can answer that question. Yeah, I'll come on to gold in a second. Let's just finish off this here. So what we're doing with the Aussie dollar is that it's broken out this channel. It's hit, it's really stopped at the moment. But if you look at this current candle from a 1 hourly perspective, it's only about 23 minutes in, so it's 8:23 London time. It'll be good to see how this bar closes, because if this tail or the wick stays like this, there is an opportunity to take a bit of a trade above, up here at a breakout. But anybody who has watched these before, I tend not to take the breakout. I tend to take the retest just for confirmation, because it avoids me getting spiked out. Some people like to take the spike, but I tend to wait for confirmation from a smaller time frame whether price is actually broken it or is it just poked up. If there's any questions on this, please let me know. But looks like this downward channel from a short-term perspective is sort of breaking down, strength coming in. Even the current bar, it's showing strength. There is some resistance here. So let's see how many pips that is really. Let's try to measure it. So let's see. So it's about 14 pips. So this is more of a scalping opportunity, but that's what you're doing. You're starting from the longer term time perspective and then working your way down. So I had a question on gold. So let's have a look. And I think I did some analysis on gold the other day. Let's see if I can find that chart. Just bear me for a second. Right, okay. So I believe this was from a few days ago. And in fact, I think there was some additional analysis. Let me see if I can find the chart that I used a few days ago. No, I think it was this one. Let's see. Let's magnify this. So this is a 4-hourly chart. Let's see if we can now find out what has been going on. So I think the question was, I bought, but it should, but I just read the question. Discuss similar analysis in gold. 1925, I wrongly bought. So let's see where you bought. Right, so you bought around here, and I do remember talking about this. Is essentially what we are doing. In fact, let me start again. Let me start with a brand new chart and do a top down, and I'll try to explain it to you. So let's just see if we can do that. That'll be more useful to you than just me sort of pointing to previous. So let's just start again. Let's get rid of everything. And start from a daily perspective. Let's move this down here. Squeeze the chart up a bit. And what we can see here is that we have our major sort of resistance there. Support here. And we have some levels here. Why is that one important? Because look, it struggled there, resistance, broke through, support. So clearly 1893 was a good level of support from a daily perspective. Now let's go to 4-hourly. And from a 4-hourly perspective, let's see if we can speak clearer. So let's put some levels in first, then we'll put some channels in. So we can see there's some like resistance here, and we can see some support here. So where are we in terms of trends, etc.? So let's see if we can find any more levels here. So we can see there's a level of interest here. Let me just pull that up a little bit. So we can see price came down, went up, ranged a bit, bounced off this level of support, tried to get higher than this level here, but it couldn't, came down, tried to break through, and this is probably where you got caught. But what we can see here, right, is this breakthrough here. Let me just see if I can go to a smaller time frame. Right, so this is today, so we're on 4-hourly, and there's a lot of resistance above 31, right? So this resistance has been caused by these areas here, right? So this is support, support, broke, support, resistance, resistance, resistance. So if you had bought, without getting too sort of into detail, can you remember what day you did that? It must, I guess, have been around here, and it's hit its head on this level here, and it started to come down. I guess what we did, I think, let's go to an hourly perspective, squeeze that up a little bit. Right, we can see this channel, upward channel. Right, but the resistance above it it's so strong, meaning, look, every time it's hit 1931, it's bounced off it, and I guess that's where, am I correct in assuming, okay, so let's do yesterday then. So let's see if we can find that level. Just describe your rationale. What made you buy? And this is to help you rather than to criticize. What made you buy at 25? So let's just put a line in here, and I'll see if I can try to help you. So I guess maybe you bought around here, I guess. So this is 1 hourly yesterday. So I guess you must have bought around here. Am I correct? Now, depending on whether you bought it here, where you would have had the distance to go to this point, right? So depends on what part of the day that you did it. Let me see if I can measure that. Because, as I said to you before, you've got to be very mindful of support and resistance. And we can see here, there's a fair amount of resistance here. And I think if from an hourly perspective, we could probably get a little bit tighter here. So we can see this region here as being, from a 4 hourly and 1 hourly perspective, resistance. So buying, you don't have much of a window. To take a buy at the bottom of the channel, you need not much resistance ahead of you. Let's see what the question is. Yeah, so it's the resistance that you didn't really pay too much attention to. I mean, again, I don't know if you bought it on the pullback or whether you bought it on the way down and it just went straight through you. I mean, I can't tell. I mean, you know that. But taking a buy with so much resistance above it would have been a bit risky, unless you were just really taking a scalp, you know, from here to 31, sort of four points or something like that. So the resistance is probably, keep mindful, right? So let me see if I can help you. If you have a trade, right, what you want to do is you want to make sure there's plenty of clean air in front of you. What do I mean by clean air? Clean air means, so let's just have a look at, and I'm going to get rid of these lines, right? So let's just get rid of, what do I mean by clean air? So if you had bought the bottom of this channel thinking it was going to go up, right? You would have either hit, I mean, I don't know if you bought it and it went straight through you and then went up. Actually, that's my next question. Did it just go straight through? Ah, okay. So you bought when news hit. So it would have been around this time here. Yeah. So as I said, you know, be careful of news. Be careful of, you know, levels, either there's support or resistance. You know, try to get the best entry by having as much fresh air as possible before you know, you embark on a trade. Like, for example, we've got non-farm payroll. You know, there are people who can trade news successfully. I'm not one of them. I tend to stand to one side, let the news happen, and then see if it's telling us enough information in terms of, is this now going to be the direction, you know, for the rest of the day or for a couple of days or whatever. So with non-farm payroll, it is important that you either know how to trade it, never knock anybody for trading it. It has its pluses and minuses. Remember, we said earlier, the plus is that there's plenty of volatility. The minus is the spreads can go really wide and your fill price might not be what you want it to be. So you just need to be, you know, aware of these things. I tend to look for, you know, slightly longer term positions, you know, lasting 1, 2, 3 days, something like that, where I can see a clear trend and try to ride that trend using money management to make sure that if I have got some resistance, that I go to tighter stops, or I take partial profits at these resistance levels and, you know, go to break even. So it's also about money management, which we haven't really talked about too much, about trade management, right? You know, how much should you put on as a percentage of your account? You know, how should you take your profits, partial profits, you know, all these things we can talk about in, you know, in other webinars that I intend to do. I hope you found that useful. And look, if it was a losing trade, figure out why it was a losing trade, and then learn from it. And then, if you keep eliminating the bad trades by learning from your bad trades, you'll have less and less bad trades. It's kind of, if you don't learn anything from it, then that's just pure lost money. But if you can learn something from that trade, and the lesson that you may have learned is, okay, I'm too close to news, I'm not going to take this trade. So you put this into your journal, and then next time when you've got a trade coming up, you look at your journal and say, okay, every time I've taken a trade this close to news, I've always lost. All right, so that's valuable information for you. So do start paying attention to recording your trades and analyzing them. However painful looking at losing trades can be, I know, I've done it many, many years ago. It's not fun, right? But I switched my mindset and thinking to say, okay, it was a losing trade. What can I learn from that losing trade? Am I doing the same thing over and over again and keep losing? And that's what you're going to do. You do a process of elimination. And then by the time you've filtered out all your things that you do on a repeating basis to be positive things that you do on a repeating basis, that's what's going to help you become consistent. It's eliminating the repeating bad mistakes, basically. And sometimes it's just the market, right? But be mindful of news, be mindful of support resistance levels, look at how much room you have for your trade. Without this resistance, if this resistance hadn't been here, if you could have thought about, targeting up here, but the trouble is the resistance was there. It was clear to see. And that's why it's important to do like a top-down approach on a regular basis. And that is just to make sure that when you approach a trade, you start with a naked chart, build your story back up again, going forward, going back and current, and then say, right, from this trade, have I got enough room to make profit? Is my stop loss likely to be too far away? Am I just putting a stop loss at a certain distance, or is it at a swing point? And depending on your time frame you're using, the lower the time frame, the less likely it's to hold. So all these factors are things that you're going to need to address. But my advice at the beginning was certainly is say, look, write in a journal fashion what you did, and was it successful or not? Did the trade go the way you wanted it, or did you get stopped out? Did you cut the trade too early? Did you move your stop? All these things are going to help you become a better trader, because what you're trying to do as and I'm not suggesting you're a novice trader, but just from a perspective from a novice trader thinking about this, and that is that you have to start eliminating things that don't work. And sometimes the only way to do that is by making these mistakes. Don't beat yourself up about it. It is what it is. And therefore take it as a lesson, however painful. And with risk management, you should improve on a regular basis. Thanks. Which is the correct entry point to improve trading? What do you mean by entry point to improve trading? So I'm not sure I understand your question. If you can clarify, I'll try to answer it for you. So entry points, generally speaking, right, is where you want to get into the market. Before you can even think about where your entry should be, you should be looking at where your risk and your potential target should be. And then you can gauge it from there. For example, let's see if we can find an example here. So look, what we can see here, we have this spike. It spiked all this liquidity that was above here. So, right, so let's just have a look at it. So we know there's been a clean sweep of people that were either looking to break out or had their stops here, right? So some of the breakout traders who may have been sitting there and saying, well, I'm going to sell support, right? So as soon as it goes into here, I'm going to sell support. Well, they've just got themselves knocked out by this news, right? So it's flushed those people out. So there's very few breakout orders there. The stop loss orders would have been kicked out as well. So now we can start looking at this area because it's being flushed out, right, as an area where we can utilize, if our idea is that we think the price of gold is going to come down, and let's just sort of pull back a little bit and say, right, what is gold doing? It's broken out of this upward channel from a 4-hourly perspective. It's hit a level of resistance, right? Is the next move back down to here? If the move down to the heads, where would be my entry points? And let's start developing an idea. And remember, this is not investment advice. I'm just trying to give you techniques and methods that might improve your trading. So I'm going to draw a level from a 4-hourly perspective here, right? So we can see here at 1910, right? Support, broke through it, resistance, broke through it, support. And now we're in the middle of this channel here, right? So we can see that from a 4-hourly perspective, we've got our boundaries. Boundaries meaning areas where we could consider them to be either places of targets or stops. So let's just develop this idea a bit further. So now we're on an hourly perspective. We've seen this downward channel break. We've seen the result of the news knock out anybody that was looking for a breakout or had their stops there, right? So it's pushed the price down, found a new level here from a short-term perspective, right? So we can start saying, well, if it breaks below here, right, it could be a continuation, but some resistance here. So if we were to take a position, right, on a retest, and if it comes down to here and it messes around here, we could say, okay, we can either take the profit we've got because we're really targeting much further down, right? Because we want to try to get a decent risk to reward. But in fact, if it doesn't come back down here, we could actually be looking this as a level of where the stops could be, right? In fact, the stop would probably be better to be placed around here. Oops, okay. So I'm just talking you through, not advising you to take any of these trades. I'm just showing you areas of interest where you can look at to determine, this is resistance, spiked up, showed weakness, found support here. Now, is it going to continue going down, right? This is the question you have to ask yourself. On this journey down, where are areas likely to be problematic? Right, so let's just draw another level here. So this is the story you're building up as part of your trade, right? You're saying that, okay, it bounced off this level at 1910 before. It didn't come quite down far enough, but this could just be a reaction before it starts coming down, right? So we want to look at, as we speak at the moment, right? It's not enough yet, but there could be some resistance building up because look, we're seeing a weak bar. From an hourly perspective, you really got to be on top of your game, right? You've got to say, okay, I'm consolidating in this area from this downward move. There is some support here, and there could be a small trade down here, but that would be too small in terms of our risk to reward, right? So then we have to start looking at ways to identify, is this trade going to come down, or is it going to break to the top side? If it breaks the top side, we have a little bit more room, because if it breaks, it's probably going to come back and retest this, right? So remember, it's about looking at price action and the bars telling you where the strength and weakness is. Right now, it came after that news, came down, formed a small ledge here, trying to increase, found a little bit of resistance here, but it's on short-term time frames, right? You have to be fluid in the way that you look at your support and resistance levels, because this could only be, for a couple of hours. There could be, in fact, there is news coming out at 1:30, so this could just be a pause for when the news is announced, and it will either break to the upside or break to the downside. I know whenever I say that, I even have to smile to myself, because it's like saying it's either going to go up or down, which doesn't seem helpful to anybody, right? But with news, that's exactly what could happen, right? So this is why you've got to be a bit cautious, but it doesn't stop you from building the idea. It doesn't stop you from saying to yourself, okay, I'm going to watch news, see what happens as a reaction of the news, and obviously go to, you know, the plus Zen for next calendar thing, and just see how news affected it previously. Does it just go up and down, or did it find a direction? So the whole point, you asked me the question, you know, where's the entry point? Where would I use my entry point? My entry point is totally fluid, subject to news and new information. So we looked at the news, and there's news coming up 1:30, right? So this could just be a pause waiting for the news announcement. But right now, it's created a level on a 1 hourly basis, support and resistance here. It's going to break out either to this side or to that side, subject to news, right? This is what trading is. It's seeing where you are now, seeing how market reacted to different levels previously, and how news may affect those levels, whether they respect them or break them. I hope you found that useful. I've probably gone on a bit too much again, but I do try to help as much as I can. So look, we're 46 minutes in. I'm just going to go back to the news very quickly, just to make sure that you're aware, right? So 1:30, watch what happens, right? Is this news going to be impacting the euro dollar, for example? And remember, wherever there's a dollar, so even gold will be affected. I won't say in a similar fashion, because there are different, different elements to it. But watch how gold will move at 1:30. Watch how gold will move at tomorrow at 1:30. You know, when we have the non-farm payroll. So you need to be careful over the next couple of days, because those next couple of days will determine really the trading or the direction for certainly next week, I would imagine. Okay, on that note, I think I've covered everything I want to cover. You know, take a note of the URL, you know, Zenfinex Plus. It's a free tool. I use the calendar all the time. We didn't really get much time to cover, you know, the technical views and technical ideas, because we did a lot more chart analysis, which I think a lot of people prefer. And that way you build up your own skill set in terms of, you know, being consistently profitable in this. Okay, so now I'll be back next Tuesday. Stay safe in the markets, you know, use stops. Make sure you're aware of upcoming news, particularly for today and tomorrow. There's always, the market will always be open the following day. So don't, you know, feel you have to trade every single day. And on that note, I'm going to say goodbye to everybody and see you next time.